Hello, everybody, and welcome to today's episode of Trade the Chain. It is Memorial Day, Monday, May 5th, May 31st. Thank you for joining us. As you can see, I am with our guest in person, Danish Chaudhry, head of the Bitcoin.com exchange. And we have CJ from MarketRebellion.com. And Monty is on vacation, and the best hair in crypto is traveling currently in an airplane. So you're stuck with the three of us.
Stuck with us again.
But listen, it wasn't a clickbait title. This is going to be a really informative episode. We're going to do macro analysis of Bitcoin, the crypto markets, but we're going to give you a conclusion, our thoughts on that title question. Is the Bitcoin and crypto market bull run over? And that's a question that's on everybody's mind. And my personal opinion, I feel like this weekend, actually going into this weekend, I felt like it was going to be a big test. And to how I feel now, how I feel yesterday, and actually I spent this weekend with Danish down here in Barbados at his house, working on some things, and I felt comfortable. I feel like the market sustained, it held up strength, and it fought back against a long holiday weekend, low volumes, and more. So CJ, you're pulling double duty again. Kick it off, my man.
Well, let's start with our disclaimer just by stating that nothing said by Market Rebellion or Trade the Chain should be considered financial advice. Remember, what we discussed today is just for informational and educational purposes only, and hopefully entertainment. Trade the Chain is brought to you by Trade the Chain, an AI-driven sentiment indicator and dashboard alert system to help you beat the market. Now with a community of traders all throughout the world in every single time zone, you can sign up for Trade the Chain at tradethechain.com, and we'll show you a glimpse of their dashboard in just a moment there as well. And then marketrebellion.com/crypto. This is Monty and myself at our community at Market Rebellion. And with us, you get exclusive access to trade insights on a weekly basis, as well as our macro portfolio allocations, a pro charting platform, a trading education curriculum, an elite community of traders all throughout the world, and much more. If you're serious about trading crypto, this is the service that gives you everything you need all in one place. You can start your first month trial for just $1 at marketrebellion.com/crypto. We appreciate that, guys, both from the Trade the Chain community and the Market Rebellion crypto community. Going down, looking at the markets today, like Alex, you said, we didn't get that sell-off this weekend. We got it a little bit earlier in the weekend, I think around Friday, Saturday, but we really, despite those low volumes, have held up here relatively nicely. Still long-term bullish, reading on most sentiments. Trading volume significantly down, so we'll talk about that in a little bit. But today's analysis, I want to break into 2 to 3 parts. First part just being by technical analysis. Second, by looking at on-chain metrics and more macro indicators. And then finally, we're going to try and answer the question to the best of our abilities: is the Bitcoin bull market over? Just to tell you, short answer from my opinion here, I don't think so. I think if it truly is the end of the bull market, it was suspiciously quick, but my gut feeling tells me that we still have plenty of upside after potentially being range bound for maybe the next couple months. But looking at the technicals here, I want to point out the fact that we've dropped below the 200 period moving average on the daily chart. That's this red line right here. That's going to act as very critical resistance, as well as this 20 SMA that is coming down. So a couple things. We have immense volume coming from sellers, we have immense resistance coming from sellers up here at around 44 to 45K. Now, what would get me in a short-term long trade? I would say 3 things on the checklist. First, we need a strong close above that level and a flush break above that 200 moving average, maybe even the 20 SMA as well. Bullish engulfing candle, increase in volume, and then a turn down in the ADX, just like that. If we get those three things concrete, then that's enough for me to justify a short-term entry and continue accumulation. But as of now, I don't think we've seen roughly a strong bottom, but we're bottoming nonetheless. And I have to pay attention to that, and I have to respect it. Looking at a more macro time frame, a lot of what people have been doing is comparing this current cycle to 2013. So if we take a look at some of the drawdown levels, 2013, you can see that from the weekly candle body close to our bottom, it's about 55% drawdown, but that did not take us below that 20 period smooth moving average. We actually still held above it quite nicely. So it is a little bit concerning that we're dropping below that 20 smooth moving average on the weekly chart here in 2021. But if we were to fully retrace, similar to the ways in which we did in 2013 in kind of that two-pronged rally, that bottom would be basically anywhere from 27 to 26K. So I think that would be a great ultimate level to say, all right, the bottom has got a very good chance of being in for a variety of reasons. But 26K is what I'm looking at now for kind of a ultimate max pain scenario. On CNBC, we had some chartists talking about, that massive head and shoulders pattern that's going to take us all the way down to 20K. That pattern means nothing until we actually do break the neckline, which would be about 30. And even at that point, I don't see us going all the way down to 20K. I don't think technical analysis is enough to consider in this overall market environment because there's just so many things that are different from kind of 2013. We have Goldman in, we have a ton of people that are really getting into crypto. But the thing that I want to highlight is that we've had a slowdown in institutional demand according to on-chain metrics, as well as exchange balances. And so all of that institutional demand that initially took us up to 20, 30, 40K with MicroStrategy, Square, Riot, Mara, Silvergate, all of these corporations, while they're still in crypto, we're just not seeing strong institutional demand continue to buy Bitcoin at the levels in which it was prior. So that's obviously going to slow us down and kind of impede positive news and maybe a really strong reaction rally in the short term. That's also further characterized by a massive drop off in futures open interest. So a lot of times we have institutional players, or just, I guess, the smart money in general, you could call it, trading Bitcoin options on futures and things like FTX, as well as Bybit and Binance. But as you can see, this is just a further kind of confirmation of that decreasing institutional demand. This one I like a little bit more because it speaks to the bullish perspective, and it speaks to the fact that we could be very close to that 26 or 27 capitulation level, or we may have even hit a bottom at 30K or 29K. I think that was kind of our absolute low. But you can see when compared to previous levels of capitulation, we're getting very far down there, and we're approaching levels where we're typically near the bottom, at least in the shorter, longer term cycles. This one is an instance of that same chart, but just adjusted from short-term holders to longer-term holders. So this measures, the net unrealized profit and loss of those shorter-term holders, whereas this one is more for those longer-term holders. And as you can see, we've had a drop from severely euphoric levels, similar to the ending of previous bear markets, kind of very similar as well to this 2013 false top. So I think it's important that we recognize kind of where we are from that turning point as well. Some takeaways that I think we can learn for next cycle. Well, the Pi cycle top was correct, and I am going to sell everything I own next time this intersects and we go very far up on the way up.
Whoa.
You guys want to chime in?
Oh, no, that was just a big announcement thrown in there, nonchalantly. I like it.
Well, we're very far from crossing now. We have to go up a significant amount in order to recreate that intersection, somewhat similar to this prior level. So I will be watching for that. And if we do get that intersection, I will sell a considerable amount in preparation for that further on bear market.
Yeah, see, the pi cycle chart came about, or at least it landed on my desk, maybe like 2 weeks before the gap. I'm like, everybody brings out an indicator that, fits their thing. And it was like, oh, it's the top. I'm like, oh, it's not. And so just like you, I didn't sell at that point either. So,
well, it's a young metric, but it's
Yeah.
proving to be correct in going into this instance, which, and this is something where, everybody on this show, we talked not negatively, but we didn't take serious consideration of a pi cycle top indicator until it further went down that road and started hitting most of those check boxes. So now we do pay attention to it a little, but it's one of many tools in our tool chest. Keep going, Mr. CJ.
Yeah, and the reason why we kind of looked past the pi cycle top was because we saw so many other macro indicators, kind of like the reserve risk, that had told us we were not in this drastically overbought condition yet. And so this is one of those charts, as well as the stock to flow model, that kind of tell me and give me a gut feeling that if this was the end of the bull market, it was suspiciously quick. And it just doesn't seem consistent with previous market rallies. I still think there's going to be a second leg up to this cycle. I just think we're going to be range bound in Bitcoin for quite a while, potentially even deep on into July and then August, just based on kind of our current levels. So going back to kind of the weekly chart here, haven't yet found support, but we've got a TD buy 9 on the weekly coming tomorrow, or coming next week, next Sunday. So that'll be very interesting to see. But overall, I still think we're in the bull market. It's just, it would be suspiciously quick if it's already ended. But that's pretty much what I've got on my side.
but you could think it's quick, given we were in a bull market for 6 months, I think, and like a very, very extended long time. And so I don't think this is any more quicker than the 2018. 2018 finished in like 3 days. It was literally just like, you saw we just go from 10K all the way to like.
Well, the reason, yeah, but
Okay.
one of the things that made this quick is because in going into the 2018 ICO bull market,
Yeah.
it was like the US market from 2008, right? It was a steady incline going into that, where this was the crypto winter from 2018 to the beginning of the bull market was really a sideways market. It didn't have that steady, kind of incline, and then of course we had the flash crash.
Yeah.
I agree, CJ, that we are going to get that second leg up, much like 2013. But I'm going into, and this is something that we spoke about as well. I'm waiting for mid-June to see where the market's going to be. I really feel like that is going to be the precipitous on whether we either go, if the market mid-June is on an increase, we start having bullish price action, that's going to be our second leg. If it is not, and we're still where we are now, range bound, then we're going to go through the July, August months and then restart that second leg in September. So mid-June is where I'm waiting to make a decision. I think you're around the same mindset, but
I would say
Yeah.
probably later in August, maybe September, because historically, like, we have seen absolutely face melting rallies throughout fall and winter months, especially throughout.
oh yeah, no.
Historically,
I'm
that's
saying
more.
mid-June, if it hasn't started mid-June, if we're range bound, we haven't had a significant bullish increase, then we're going to be range bound all through the end of August. If we start having a significant velocity going up between now and the next 2 weeks, I think that will continue to the end of the market.
Yeah, it's interesting. I don't know if I would compare this to 2013. Mainly because 2013 was Binance even didn't exist at the time. FTX didn't exist. There were no futures. There wasn't, I think the market was so small. The price
It's
action.
better than 2018 though.
Oh, it's better than 2018,
was a
2018.
crap ICO.
Yeah. But I wouldn't say 2013 is a good comparison to this because there were 50 assets people were trading.
Each cycle's been different.
Yeah.
But you know, one of the biggest surprises, besides the fact I think I have a bug in my water, is the fact that
Welcome to Island.
is the fact that during this cycle there was so much hype and hope on institutional interest in here because that was going to create stability of the markets because they were obviously going to check out their best interests when you know we had support issues. But that has never materialized, in my opinion. And one of the things that I'm interested in seeing is CJ, when we're in Miami, I'm going to be interested to hear what Michael Saylor and Jack Dorsey have to say. Now, Michael Saylor more because he's such a big proponent of it, but I want to hear the reasoning as well as the other institutional crypto shops on what the excuse now is why we didn't get that overwhelming demand in. And see if they change their narrative from fall.
Well, Michael's like a full-on bull though. He's so bullish.
Oh, it's going to be interesting.
And I don't know. I can see why there's been a lack of institutional demand because so you have the guys start buying in when all the news was coming out, like a month ago, whatever, and all of a sudden your market does like a 50% haircut. There's not going to be any new demand because there's like, oh, A, we're underwater. Or B, we haven't really bought in properly because this is what's happened. And C, I think consumer demand through those institutions has definitely noticed this drop and been like, okay, let's just not kind of get in yet.
And looking into just the comment section while we've been chatting, I disagree that we're in a bear period. I believe we were in a mere hard consolidation period from all the run-in into crypto, all the retail inflows in Q1, and now all the liquidations, all the weak positions coming out. So I don't think we're in a bear period. I think we've heavily consolidated and we have the strong market in now, and we've weeded out the weak hands. CJ, what do you think?
I think that's an absolute possibility. I want to touch on the point that you can't compare 2013 or 2014 to our current cycle because things have changed so much. I do agree that the market has changed drastically. I mean, it's evolved tremendously in such a short period of time, but I still think human psychology remains the same. And the reason why the Pi cycle top has remained consistent is because it's not measuring whether or not corporations or the fundamentals, it's just measuring how fast people respond to a certain price increasing and when they decide to take profit because things have just been getting really overheated. So I still think that can be a reliable indicator regardless of how mature the market is. Human psychology will remain the same regardless of, kind of how much capital overall enters the market, specifically when we reach peaks and valleys. And I also think it's really notable to mention that concept of, regardless of whether institutions are in or not, there's no lack of volatility. There's no price floor that's been artificially put in by that. They're just market participants like the rest of us.
Yeah.
There's a possibility. One of the things that we did see, I think maybe like a month ago, like a sort of decoupling of alts to BTC. So you saw BTC ranging down, but most of the alts across the board were going up 10, 20%. And so that's when I was speaking to a few other people. They're like, yeah, we might actually eventually this year or next year or whatever, see like a complete decoupling where Bitcoin becomes its own little thing and all the other alts move by their own volition.
Yeah, I don't know if anybody noticed, but going back a month ago, 2 months ago, And I know a lot of viewers are altcoin holders. I'm an altcoin holder, Danish, everybody on the show. But it was when I would be going throughout the day, or when I'd wake up in the morning, I wouldn't be so dismissive of a BTC down price, because it usually meant when I checked my altcoin positions, they were up, to Danish's point. And when the altcoins were down, BTC would be up. So it only happened when we went through this consolidation. I do think along the lines with Danish and apparently Mr. Lucas Bradley, that decoupling will happen, and it'll be good when that does. And especially this has to do with the dominance chart. Taking a look at the dominance chart, I mean, we're never seeing 60% again. What are we in the 40s, CJ?
We are 43%. Yeah.
Altcoins have created a mind of their own alt verse. I think it's it's not to say there's not a lot of shit coins out there. So it's going to be like 2017, where a lot are getting wrecked, but that's not unlike the pink sheets. So it's not dedicated to this market. Yeah. All right. So CJ, if you I know a little bit about your investment style. What is your mind telling you? Because I know people love to get into your brain. What is your mind telling you over the next 2 weeks?
The next 2 weeks, let's look at the charts. Let's ask the charts. Because if we're going by that short term, I think that we've had a lot of people liquidated from this market. I think that we're running out of sellers in the short term. I do expect a reaction rally, especially now that we've kind of gotten this bullish hammer candle and are actually closing above 36. But like I mentioned earlier, like there's just so much resistance, not only at 42 and 45, but also as we get up into the 50s. So that's why we might get some reaction rallies within the next couple of weeks, but until we create a higher high, we're still in a large range between like 30 and 50 here, or even 55. So, I am bullish in the short term, but I just see us being range bound here throughout the summer.
Most of the traders that we chat with, mostly range bound. This isn't territory for like the average trader to try and play this market. I think this is more a scalper's market. So you know how to scalp orders, how to do stuff, and not in size and like moderate sort of thing. But yeah, I think we're range bound until end of the summer.
Yeah, I think it's a holder's market, and opportunity is going to be, on new projects that come into it. And if you don't know how to scalp, and just don't even attempt it, and just sit tight and watch us every day as we fall asleep.
I didn't have any positions short term going into this weekend and this holiday, just because I didn't want to trade with such low volume, and who knows what the volatility could do at that particular point. It was virtually a toss up. Now I think what folks do care about, and of course not financial advice, but what about accumulation levels in your guys' mind? For me, I think kind of our current point, if you were to ladder in and say fourths or thirds, I would definitely like Bitcoin at below 35K, maybe even at our current prices. Also, I would love to get it below 30. If it could get it at like 28 to 25, I think that would be probably one of the best trading opportunities, because it would almost be like the equivalent of us going to 6K in that middle of the March rally in 2020, where we just got awfully rejected. When you have mass liquidations, when the exchanges are barely able to stay up because price is crashing so fastly, that historically has been some of the best times to buy Bitcoin, at least in my experience.
Well, people got to realize they can DCA down.
Mm-hmm.
They don't have to DCA up. They actually can DCA down. and get that better price point. So it works in both favors.
Is how far down do you keep going though?
And it also depends on if you're fiat rich or poor. I mean,
Let me be more specific though, because I don't mean just buying, like catching the falling knife, because you're absolutely right. No one wants to dollar cost average going into a bear market and destroy their capital for, the next 2-3 years and not even be profitable until we go into another bull market. So what are the things that you can do to wait to increase your probability that you're not buying or catching a falling knife? Well, some of those things I talked about earlier on the checklist, like one, seeing decreasing volume when it comes to a bearish trend, also creating like a higher low, that would be very, very important. I think if we went down to say 25, came back to 30, then we're rejected to 27 and held 27, I would love to buy that price area because you're creating a higher low in the trend. You're creating kind of bullish momentum, actually kind of what we're doing now.
It's going to be interesting. There's a coin that's coming out, a Euro stable coin. It's the first Euro stable coin. Have I talked? I think we've spoken about it.
Yeah. So I know Euro S is one.
Yeah. Yeah. So what's interesting is that I'd like to see a bunch of those different currency coins, stable coins come out, because then we can start attracting some of the typical forex players. Yeah, they're gonna love that. Yeah.
Imagine a Euro S USD market, USDC market. That'd be kind of cool.
So this is really cool because I know about this firsthand because my dad works for a FX exchange and they're implementing a stable coin right now just so that their traders, it's an HFT ECN. So just so those traders have the ability to have one-day settlement, they're implementing stable coins, and they're not focused on crypto at all. They're focused on euro, dollar, yen, things of that sort. But since FX has been so dead for the past few years, they're actually thinking about moving to crypto. But another great use case for those stable coins you mentioned.
Yeah, FX is kind of boring. FX used to be exciting like 10-15 years ago. We used to dabble in FX quite a bit. Yeah, compared to crypto, it's nothing.
Yeah, when Danish was at BlackRock, he kept falling asleep. That's why I jumped into
there's so many similarities between like the early 90s and FX and crypto today, because both unregulated, both trade 24/7, crazy volatility, both rally during the Asian sessions absurdly. So a lot of parallels between those two worlds, and it's not really a surprise that the stable coins are moving into that. But I think it's good overall, for the space. It brings more inclusivity.
I was gonna say I agree with your 27K buy target. Like if we get anywhere near that, I'm gonna put more chips in. Like empty all my stables and go straight in.
The only thing I will say that severely concerns me, but I still think it's very unlikely, is that the equity market were to go into a macro downturn before, say, next fall or next winter. I do not see a world in which Bitcoin can rally in the midst of a crashing equity.
No.
People don't even want to hold stocks like Apple or Snap or Microsoft or trillion-dollar companies. There's nothing that convinces me that they'll want to buy high-risk assets like alts and Bitcoin. It hasn't provided any type of fruition that's ever came to reality. Even if you look at like stores of value like gold, everything crashes in a liquidity crisis. It was only till like 2008, or it was only like a year after, like 2009 to 2011, where gold truly entered that bull market.
Yeah, it's weird because I obviously in our industry we believe digital cash and assets is the future, but it still operates in a traditional way where when a crash happens, people go from FX, stocks, gold straight into cash because then cash is king. And that's what happened last year, the year before. Like I really just flooded straight into cash when things went south. So yeah, if there is a larger crisis, and also one of the things is, I don't think a lot of people don't pay attention to the DXY or the dollar index, like how the dollar's performing sort of thing. If the dollar crashes, like compared to, everything else, then it's anybody's game sort of thing. But like, yeah, that's a very important indicator of the DXY that people should actually be looking to as well.
Yeah, it's interesting. One moment, Alex. There's actually an inverse relationship in certain cases between Bitcoin's price going up and the strength of the DXY. Like in 2017, all throughout that bull market, DXY was trending down, Bitcoin was trending way up. During the bear market, 2018, we saw the absolute inverse, DXY going up.
Technically, I think it should move inverse, because if your dollar is weaker, that means your other assets are more expensive inherently.
Well,
right?
that's the whole case in point that we've been discussing for a couple of years now, and it also brings to mind why crypto is so much like an FX. And as far as inflationary, deflationary mechanisms, people are jumping in and out depending on whether the strength or weakness is there on the other side. It's just natural flight.
Yeah, we have seen that correlation or that inverse correlation, but I think the one criticism of that is that the DXY is measured, the dollar strength relative to all the other fiat currencies. So even if all the other fiat currencies are printing money and the dollar's printing money, it will still be kind of superior. That's the only criticism I can hear, but we haven't seen it actually formalize in the data. So I'm not totally on board with that.
Yeah.
I get it. All right, cool. A few things coming up. Miami next week. Now, Miami is going to be great because we're going to yank in having lunch with Simon and a bunch of other people. We're going to yank him in and do some interviews. I know that people always put in the chats, what about this project? What about this project? We take note. We're going to grab who we can, and we're going to try to bring them on live each day of the conference next week. Also, one of the things that I just want to note, and people always like predictions, my thoughts and my target alignments for price have not changed yet. And I say yet because if this continues, in my view, through to June 15th, which is when I feel that if there's no velocity of a bull rally by the middle of June, third week of June, it's going to go through the end of August. Well, my targets are going to change, and the reason being is I do not have any confirmation or thoughts that there will be enough velocity from the end of August to get to the end of the bull run with those price targets. So I think CJ, we're gonna have to get Rob back on here in 2 weeks, and we're gonna have to review price predictions, everything that came out of my mouth and everything that's come out of his mouth, and see if we're reassessing those and let people know, because it's only fair when we shoot out a price prediction that if we change it, we let everybody know. So we're gonna do that. CJ will be down at Miami. Donish will be down Miami. Let us know if you're going to Miami. Definitely, if you see any of us, say hi. We got our one down like thumb today. So Peter Schiff is watching again. That's awesome.
One thing I'd like to mention about the Bitcoin Miami conference is that please come check us out at the Market Rebellion booth. We're going to be giving away 1 ETH. Just, if you write down your number and give an address, we're going to be giving out 1 Ethereum token. I know, ironic, that it's at the Bitcoin conference.
Is that even allowed? I think
I think the Bitcoin maximalists might get mad about that. I'm kind of
yeah, definitely go by the booth. It's going to be cool. I know there's a lot of people from the Market Rebellion side, and maybe another company that'll be there. We're going to also be doing a live stream next Saturday morning. Saturday morning, Trade the Chain live stream where we will be launching something. So that'll be fun. Yeah, so it's all good. But we're going to definitely come back in 2 weeks and let you guys know if we revised our predictions and what those predictions are, as well as where, if we feel the cycle is going in the same direction as far as an end date and whatnot. So we'll be transparent with folks. And that's it. Thank you for a happy Monday, and we'll see you guys tomorrow.